Level 2 trading is focusing on 4670. About 12 handles away from that. All right, we'll talk about that in some more detail once we get started here. Whoa, that was a weird thing. Okay, never mind. I had the YouTube volume on. I'm kind of tracking the YouTube question box here on the right. I have the Zoom question box here on right to the right, right of the right. And sorry about that. And we'll get going right on time. We got about 3 more minutes here. Kaz, good morning. Good to see you back here. Hope you're doing well. It's my new friend Kazimo. Today is December 7th, as we already said. It's Tuesday. It's almost Christmas is approaching us now. Things are flying. It's finally a little cooler here in Chicago. Charlotte. 43 degrees this morning with the high up to 52. So the unusual warmth is going to creep away a little bit over the next couple of weeks here, but that's okay. It's way better than the Chicago winter weather. Joshua, first time here. Thanks for coming. Appreciate you being here today. Excited you're here. Yeah, you found that question and answer box, so just kind of, chime in anytime you want as we go forward here. We have some unusual days facing us since Friday, last Friday. We'll talk about that. Anisha, good morning. Bando, thanks for coming. CodeXE, is it Codex? CodeXE, CADXE, good morning from Washington, D.C., District of Columbia. I took the family to a Washington, D.C. tourist trip, I don't know, 2 or 3 years ago. It was awesome. A lot of great stuff there. Griffin is here. Griffin's long from 50. You're talking 24 handles, Griffin? Holy cats. Stop 70 and a quarter. Well, even if you do get stopped out, you got a good 20 handle trade in there. That's sweet. Love to hear it, man. Love to hear it. Tomas, good morning. Greetings from Colombia. Barranquilla, Colombia. Thanks for coming. We're going to start right on time here. I just kind of want to give everybody the opportunity, since we did say we're going to start at 10 o'clock East Coast time, 9 o'clock Chicago time. Paul says, good morning from very rural Northeast Pennsylvania. Paul, I don't know if we're going to have another one of those, to be honest with you. I'm loving this NinjaTrader software, and I love doing these presentations on here. CodeXE is yes, entry 4648, still going. Yeah, this is just amazing. This is an amazing market. Let's get started here. For those of you who are new, welcome. For those of you who aren't new, welcome. My name is Jim Cagnina. I am the Senior Education and Training Specialist for the NinjaTrader platform. I sound a little echoey today, so I'm going to close my anti-echo blinds. I got anti-echo blinds in my office here. That should be a little bit nicer. I do want to remind everybody that trading futures options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that could be an equation for opportunity, it's also an equation for risk. Let me start that over. Oftentimes you have a high combination of leverage and volatility, and that could be an equation for opportunity, which I hope is why we're all here. It's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition: money I could afford to lose. Doesn't change my lifestyle, lengthen retirement horizon, or overly anger Mrs. Cags. Now, that third part's a little tongue-in-cheek, but not really. Stress in life matters. When we're under stress, we make bad decisions. At least I do. So be careful. Easy on the day trade margins. Be patient. And thanks for being here. I'm logged in my Sim account today, Sim Live account, real-time data feed on the NinjaTrader software. And we're just going to get right into it. I mean, look, here's a daily chart for the ES. I mean, this has been extraordinary amount of volatility, right? And, you know, I just kind of, all right, since, you know, we had that big Friday scare, right, with the COVID variant, we've had these huge average daily, these daily ranges, right? So I just kind of tracked them, right? 1126, 140 points. Remember, in the E-mini S&P, a classic E-mini S&P, it's $50 point per contract. Right. So that's a spicy meatball right there. 140 points, 81 points, 110 points, 153 points, high to low, 87 points, high to low, 114 points, high to low, 80 points, high to low. And today I stopped counting earlier on. It was 75 points. It looks like it's a little bit more. I'm using my crosshairs here. I'll tell you what it is. High to low, you know, 80, we're in the 90s, 93 handles, 93 points. These are really volatile, really big ranges today. And you could kind of eyeball some of the regular sized candles. Call them baby candles. Well, they're not even baby candles. They're real candles. But wow, we got this, we had this really knee-jerk reaction to the whole COVID situation, and we bounced back strong. I think profit takers or dip buyers are like, hey, we got to get in on some of this. Mario says, I will pronounce that as Barranquilla. Wow. Huh. From Facebook, Edwin Fernando, Mora Marisas, Medellin, Colombia. Sweet. We got two. We got Colombia's like in today. Love it. Thanks for coming here, guys. So right now, you know, my bias in this market, well, I'm going to reveal the punchline is bullish, as many of you are long for all morning long, which is good. Fibonacci retracement here. We're past the 23.6%. We're in bull market mode. Same with the NASDAQ. A little bit of a different structure, but not that much. We're above the 23.6% again. The way I drew mine, resistance became support, and support held. A lot of times you see it when you could identify a long-term line of resistance, area of resistance, which we identified here at the end of August. Draw that line straight across, and that sometimes becomes an area of support, whether it's scientific or magical, who knows? But that line was kind of helpful, I thought, when I drew it, and I'm going to keep it on the chart. Again, bull mode here. NASDAQ is strong. Dow, Dow was the weak link for sure in the stock index futures arena, but we've kind of, you can see by these Korean candles, we are powering through. Crude oil, different story here. We have some, we had Omicron Friday here with this big price dislocation, and then we had actually have a better crude oil chart. Look at this. I got notes on this one. Double top, channel that was broken. This bottom channel now is going to become area of resistance. We blew right through it. We're back into the channel again. We have all sorts of stuff happening with OPEC and OPEC plus. We have a huge $1,127 candle just on a micro contract. Imagine that. And now we're kind of settling in the low 70s. We'll see how that goes as we go forward here. So I thought that was kind of interesting chart to take a peek at. And then gold is kind of a nothing burger, man. I mean, we're at 1782, and ho hum. I'm just shocked that Omicron Friday didn't drive this supposed flight to quality instrument bananas. It didn't. Nothing really happened much there. We had sellers coming in that Friday and then sideways ever since. That's kind of the bonds, treasury bonds. We're pretty, we rolled over, right? We rolled over to the March contract, and right now we're fighting around 62.18. I think that's appropriate. We'll see I think there's a lot of downside in the treasury bond complex right now, especially in light of all the stuff we're hearing about tapering. Carlos says the VIX hit the 35 level for the first time since Jan 2021. Bullish again. Yeah, I cannot identify a place to sell anything right now. Right. All I did this morning was I just put an order in at the point of control for 2 micros. And remember the lesson that I learned anyway on Tuesday last week. When was it? Today is Tuesday this week. So it must have been Tuesday last week. Was when we have these huge average daily ranges, there's a lot of meat to be found in a micro E-mini S&P or a couple micro E-mini S&Ps or a micro NASDAQ. As a matter of fact, the volume on the micro NASDAQ has been pretty substantive. Any event, bounce. All right, let's go back to the questions. Black Ben, welcome. M. Bartlett, good morning. Ben is 2 at 46 3/4. That's a sweet trade. Anybody who got long early this morning is doing well. Good to hear. Jim, good morning to you. Futures margins, sure. We'll talk about futures margins for sure. You could see my intraday margin. My day trade margin here is $100 already. I'm using $100 already in my day trade margin of my $10,268 cash value in sim account 1. And that's because I have 2 contracts here that are sent as limit orders to buy at 46.50 and a half. And what it's saying is, hey, this has the potential to get filled. It's a $50 day trade margin for each contract here in the micro ES. Since I have 2 contracts on, I'm allocating $100 of my account to a day trade margin for this potential position, right? And I put that in earlier this morning. We obviously didn't get filled, but I'm going to leave it there for a second. Gerardo, good morning. Pret, there is a micro contract for gold. You could see it over here on my quote board here. If I click on it, my chart will change. There it is. It's MGC is the ticker symbol. And I got the February 2022 contract up. We have about 25,000 contracts in that market. So it's liquid enough, in my opinion, but it's not super liquid. Like you see the bigger size gold contract here at 82,000 contracts already today. So be careful with that. Best practices, make sure try to enter in limit orders and that kind of thing to help and be a little bit more patient. But yeah, it's very tradable. It's again a CME group market, and it tracks almost 100% correlated with the big size contract. MA, good morning. Martin, good morning. So yeah, experiment with that. It's there for you. Let's just go to the micro NASI. Let's see what it's looking like today. The volume profile is really kind of scattered here. A lot of bumps and bump and grinds here on our move up. But it's low volume. Look at the very bottom of my chart. I have a volume kind of histogram chart here. Shows all the volume kind of creeped in at the open, which is not surprising. This is kind of what happens, right? Again, though, we're at the high. I do not see an opportunity for a counter trend trader just yet. I would like to see at least 3, maybe 4 candles of generating an area of what I would call interest, an area of resistance, but resistance is futile right now. I mean, we're just grinding up here in the stock index futures. The Dow is up almost 500, 499 right now. Might even be 500 by the time I'm done with my sentence. Buenas tardes, Francisco. My trail stop got me out early. That's okay. The whole idea of trailing stop is a good thing. And you typically, when you're trailing a stop, you're chasing profit, right? You're trailing with the direction of your trade, not against it. Moving a stop further to give yourself more breathing room on the downside is typically a bad idea, in my experience. Rebecca, good morning. Haven't seen you for a while. Thanks for being in here today. Rebecca Corpus is here from Arizona. Thanks for coming. Griffin says my $4 SPX calls are trading over $10 this morning. Wow, that's pretty good. What's your feeling of SPY calls versus SPX calls? Out of curiosity. Carlos says the 90-day VIX was higher than the 1-year average. Yeah, so the VIX is a weird thing. I mean, it's definitely keep your eyes on it. I just look at the size of the daily candles and kind of look at the trading ladder to see what the bid and asks are. As you see here in the E-mini S&P now, we're kind of normalized again a little bit. Where the bids, this is the classic E-mini S&P I have on the NinjaTrader Superdome, and these bids here and these offers in the book, in the CME Globex book, are triple digits again. In previous days, the last couple of days, they were only double digits. And one might say, well, why is it only double digits when the volume here, yesterday was already 1 million at this point in the day. It seems like that more volume, the bid-ask spread should be thicker. Well, the price was moving so quick that bids and offers were put further away from the last traded price, and traders were being more nimble on their entries. And that's my experience. Now that I'm seeing triple digits here on both sides, I'm thinking we're going to start slowing down and trying to get into more of a normal rhythm right now as we continue to make new highs, continue to make new highs, continue to make new highs. It's just, it's amazing. It's almost to the point now, I just go buy one and you'll be good. It's tough. That's tough to do though, psychologically. Right? It's tough to do psychologically. So, hey, I'm going to buy one right now. And, your counter trend instincts are going to be, well, I don't want to buy the high. Can't go any higher. Well, heck yeah, it could go higher. It could go, this is a river that's flowing wild right now. It can go anywhere. So this idea that it can't go higher, I don't like that idea. I think it could go higher. It could go lower. It could do anything. But be open-minded, I think, is my advice. And if you want to be more aggressive on an entry, you certainly can. And let's be more aggressive on a buy entry as I'm looking at this thing. And aggressive in my world. Let's see, MES. Oh, I have the wrong account here highlighted. Maybe. I have MES. let me change it over in my trading ladder, MES. And you could see the bids and asks here are a lot different. And I'm in the March contract. That's why. My bad. All right. That might be a little premature. Let's take a look at the volume here. I think MES. Yeah, so okay. So folks, it might not matter that much because we're going to do limit orders. So what we're looking at here is the March 2022 contract. Some of you guys might be trading the December contract, which I have in my quote board up here on the ES, and I have the micros in March. So that's where my hesitancy was for a second because I already rolled over on those things. And rollover is not a complicated concept at all, but it is a concept. So I'm going to look at this volume node though. Like I'm going to look at where volume is traded more so than not to get maybe a little bit more aggressive on the buy side here. Waiting for a pullback. I can't even draw a fib line right now. And so we're going to do something similar to this. Lining it up with where some volume is displayed its reared its ugly head. And this is, 8 handles away from where we're trading right now. So you might say, well, that's pretty far away, but I don't think so. I don't think that's far away at all. I think my stop is going to be down below this low, and then maybe we'll scale into a couple of units if we get lucky. So that's the game plan right now. Let's see how this treats us. I'm going to hide my chart trader. So I could right click and place my trade, but I don't have to worry about that panel being in my way. So I could see. Again, making new highs, pretty tough. Griffin stopped to 80. Oh, he's in the December contract. My bad. All right, so that's a problem. Problematic. I'm going to go ahead and see here. Add instruments. I'm going to add that back. Probably put it down here. Let's click on it over here. 83 handles. We'll compare apples to apples here. We will compare apples to apples here. And I'm going to go ahead and do the same trade. Only here, I'm going to get rid of this 2 orders at the point of control. I feel this would be far-fetched. And then I'm going to go ahead and put my stop down here right at the bottom of the value area, which is a perfect place to put it. We're going to leave it alone. Good morning, Usia. Did I say that right? There are no clocks in Vegas. Griffin is right, and I've been there many times. It's a weird thing. And so while we're lining up units, I'm going to go ahead and just put my, I don't know if this is really going to be a competing point of control or not. Too early to tell as we keep generating these little chunks of volume as we trade higher and higher as the day goes on. We're up 92 handles in the MES right now. I mean, that's pretty significant. Let me just put the two contracts side by side. MES, December, 300, almost 400,000 contracts. The March, only 13,000. We're not quite ready to, the volume hasn't moved over to the March yet. So just keep, stick with the December and more liquid. And I think you'll be in good shape there. And I'm going to actually sync. I wonder if I could sync this up too. See if that works. Yeah. All right. I have them all three synced. Now I just click on my quote board. My dome changes. My chart changes. It maintains all of the indicators and everything I have. Everything is good to go. Kaz says, have you ever considered buying or selling on either side of the volume nodes? Logic being orders that were unfilled in those areas. So that's a market profile concept. That's a volume profile and a market profile concept for sure. And just to kind of simplify, this isn't really a really nice bell-shaped curve, but and pretend it was. So the idea is, here's the point of control. We want to buy below the point of control where the volume is less. Pick up some unfulfilled orders here with the expectation that we're going to go back to the point of control. Do the same thing above here where you see volume node here and say, all right, there's some orders sitting here. So I want to sell up there, try to get those orders. And hopefully we kind of go back and forth and always gravitate to the point of control. And I think that sometimes does actually work on a normal distribution day. But a day like today, where it's just a runaway one-way ticket up, I don't know. That's a little worrisome. So, I mean, nothing really happened today, right? We had international trade in goods, was within the consensus range, maybe a little bit on the, the less the negative, the better. I think the number in that one is, if that makes sense. Productivity and cost, it did kind of have a nice 9.6% bump there, but I don't think that's going to move the needle. Fed parade, the Fed guys are like, hey, we have a couple of really big rally days. Maybe we should just shut up and not go out and start talking about things. I don't know, but we don't have any of the Fed speakers out that I could find today, any notable speeches. Build back better. That's like a tongue twister. Build back better. Capitol Hill. That thing's probably DOA until January. Debt limit December 15th. That will be handled, I think, for sure. Earnings, AutoZone, Toll Brothers, nothing. Toll Brothers might be interesting. I mean, they're builders. They build property. They build these custom homes that aren't really custom. They're a cookie cutter, but they do it all over the country. And this is my guess is the earnings are going to be pretty good because they seem to be very busy. And then some other smaller entities. The Fed Watch 2 was interesting because now we have on the January, February, March 16th meeting, we only have a 64% chance now that the Fed funds rate is going to stay at 0 to 25%. Whereas last week we had a 70.2%, right? So now things are starting to shift toward, hey, earlier interest rate rise than originally planned. Will we get one on May? I don't know. Maybe, maybe not. But the probability is starting to shift. And then when you get down to May, the probability is less than 50% that these rates are not going to be changed. So that's kind of interesting. I want to kind of keep looking at that as we get to January and February and see if the trend is going to kind of keep the status quo, or it's going to continue to suggest that this March 16th meeting, we're going to have an interest rate hike. And I'm leaning toward that idea, to be honest with you, but we'll see how everything goes. We'll see how everything goes. Rebecca says, Jim V, I get up at 5:30 a.m. so early. Yeah, well, you were in Arizona though. You got a couple hours earlier there, but that's still impressive. 5:30 is still impressive. You beat me by a half an hour. Unless the dog decides that she wants to go outside. Then we got to change it up. And Griffin, I didn't see your comment when I made my dog comment. I would have that stop so tight if I was going to be here all day, but I'm bugging out at 11 to go do dog things. Sounds like a plan. All right, let me get rid of that. Let's go back to see what's going on here with this. I mean, this is just strong, 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 strong. No counter trend trade yet. You know, I want to see an area. I can't even draw a Fibonacci line because you're going to have to keep moving it up, moving it up, moving it up. But really, it's a case of being patient at this point. I mean, there is no resistance yet. And it's just a really interesting time in the market here that, you know, the MES, even the S&P is up 92, 94, 95 handles. Unbelievable. NASDAQ, 414. Things are moving. Things are moving. Rebecca moved to Las Vegas. I can never. You're a braver person than me. You know where you would find me every weekend. That's a good. I love visiting though. Me and Mrs. Keggs are due for a trip out. I'll let you know, and we'll meet you for a cocktail. So Sasha, exponential moving averages I think are good. So for those of you who don't know, I have a simple moving average cross at the bottom here. I have a 6-period moving average cross as my fast. I got a 10-minute chart. It's red. I have a slower moving average chart. This is a 26-period. This is my slow moving average. That's in blue. Again, I'm looking for convergence and divergence, probably more so than actual crosses. I know the name moving average cross suggests, man, if these moving averages cross, then that triggers a signal. And sometimes it does, and sometimes it doesn't. But it's certainly an area of interest, something to look at. But I like to see it converge or diverge, right? So the distance between the fast and the slow either separating or coming together. Right now, this is just very, very bullish right now, the way it looks. You know, literally we have almost a 20 handle, 18 handle differential between the slow and the fast, which is pretty decent. That's how I kind of look at it. So an exponential, there's NinjaTrader has all sorts of different types of moving averages that you could apply to your charts. Exponential moving averages, they place more weight on the more recent set of data than they do on the older set of data that comprises the period of the moving average. So if you're interested in having that moving average weighted more toward the present, then yeah, you should look at that. You should use that. But I would be careful to do that, especially when you're looking at, on a 10-minute chart as an example. 10 minutes after the cash market opens up or 20 minutes after the cash market opens up, because that data is going to be a little biased at that point, simply because there's a whole slew of volume that's coming in at that time frame, and there's a whole set of new participants that are coming in at that time frame. So, but I think as the course of the day goes on and you're generating more data, you're not up against some big news event, I think the exponential moving averages are great. And there's Wells Wilder moving average, the whole moving averages. There's all sorts of different kinds of moving averages you could apply at NinjaTrader. So Ben, I'm using simple moving average down here. I'm a simple guy, simple moving average, commodity trade, CCI commodity channel index here in the middle. You could use MACD, RSI, whatever you want as your oscillator. This is mine. Oscillates around a zero line. We're pretty strong right now, 184, but you do see the momentum is slowing down. And I often like to consider these oscillators from a momentum point of view. As these histogram bars are going lower, momentum is slowing down, and that's visual on the chart too, right? Each, here's the largest dominant candle we've had so far at 940 to 950. made a pretty big size candle at 9:50 to 10 o'clock. And then these candles are getting smaller, which are suggesting momentum is slowing down as well. So Fibonacci is, Hunter, great question. Fibonacci is kind of it's more of a art than a science sometimes, but not always. So this particular case, let's just take a look at this. Let me kind of give us some more real estate on our actual chart right now. Just kind of squish this stuff together a little bit and take a look. I mean, where would you draw a fib line now? And there's a couple of areas, right? One of them would be high to low, right? I'm just going to do high to low. I'm going to go from the low here last night around 87, and I'm going to draw it all the way up. That's my A point. Here's my B point. That's my swing. Alternatively, one might say, hey, I want to look at something more contemporary. I want to see when the cash market opened up, which would be here. Right before I would probably paint it here a couple of bars before the cash open. So to the high right here, you'd have a much smaller area to work with, but depending on your trading methodology, how quick you want to be in and out of trades. So there's one way to draw it right there. And with a day like today, until we see a substantive pullback, retracement, whatever you want to call it, the longer term moving average probably isn't going to help that much. Let's go ahead and put that in also, because we could put in two of them if you want. Fibonacci retracements are free here on NinjaTrader. You don't have to pay extra for the second one. That was a joke. So here's the second one. So 23% is way down here, right? We're talking 20 handles away. And from the way I actually enter orders, that's actually a good area of interest. That's a good area of interest. With the smaller fib line section segment that we cut out, the 23% is right exactly where that volume node is, where we wanted to try to get a unit, right? And so one might say, well, that's good. Then I have my unit in an area of interest. I like that. And then maybe I want to have a second unit at the 23.6 for the longer term retracement position. And that would kind of look like that for a second unit. And then you change your stop. But now I'm have to look at my stop. Now my stop is at the 50, right above the 50%. Do I want to be above the 50% or not? And that's kind of questionable, but I'm going to leave it there because it is below. It's few. I don't know. I would like to probably say I want to have a couple of handles below the low where my crosshairs is right now, and that's what we have. So I would stick with this kind of thing. So it really depends on how patient you are, how long you want to be in and out of a trade. When you're really focusing on fibs to kind of decide, hey, this is, I'm going to make my trade decisions off of that. So I don't know. That's my opinion. Again, I think it's oftentimes it's more of an art and less of a science, but the key to drawing fibs, excuse me, I'm sorry. Let me get a glass of water. The key to drawing fibs is to try to figure out where everybody else is drawing fibs, right? Because this is just the Fibonacci sequence ratios, right? This is probably not as scientific as moving averages or MACDs or RSIs or other things, but they do tend to have this self-fulfilling prophecy, as far as I could tell, based on my experience. So I want to draw it where I think everyone else is drawing it. And the two applications of fib that I have on here, I think is where everybody else is drawing it from a day trade point of view, right? And these areas tend to have some sort of self-fulfilling prophecy sometimes, not always, but sometimes. Nice, out at 80, nice job. Griffin, that was terrific trade. And terrific patience, by the way. So, I don't know what time you entered that trade, Griffin, but you stuck with it for a long period of time, which is admirable. Mike says try using MA moving averages based on high-low close divided by 3, which is the true average or true range calculation instead of close, less lag. It does make sense. It would be a good application of that. I like that. Level 2 trading says, Jim, do you take sigma deviation into account in your trading? No. I mean, no. I mean, the whole thing, with respect to that kind of statistic, I'm looking at the value area right now from a value area point of view, and I'd go out on a limb and say, highly unlikely for us to break below the bottom of the value area today, just based on just looking at the map. Again, Dow is crushing it, up over 500, NASI up over 400, MES over 90. That's some terrific buying. That's buying, and we could have this phenomenon all day. We might not. We might never get a retracement today, but you never know. Very unusual, and these opportunities are very rare opportunities in the stock index futures when you have this kind of volatility, sustained directional volatility. With yesterday's kind of equal and opposite candle of the previous day, and then this continuation candle where we're trading at the highs still, and it's already 10:30 in the morning. So we're encroaching lunch, and we're just crushing it. Okay, kind sir asks, is this every morning? I tuned in yesterday and today so far. We'll do it. We're going to do. So thanks for tuning in, for sure. Tuesday, Wednesday, Thursday, we do this particular event. Monday, you're probably referring to yesterday with the Benzinga broadcast. That's also Monday morning on Benzinga. And then me personally, I'll do a 12 o'clock tomorrow. How to, creating a trading plan, I think is tomorrow's event. And then Futures Trading 101 on Thursday at 12 o'clock. But with respect to looking for trade ideas, this is it. This is Monday, Tuesday, Wednesday, Thursday events. So just follow the same link. Isabella's cutting and pasting links into chat rooms or chat windows. I think we have 3. We have Zoom, we have YouTube, and we have Facebook. So Griffin says to kind sir, I think he's up to 3 days a week. You don't get a lot of work out of old guys. That's right. There's no 6 days a week for me. Oh, that's good. So I think me and Griffin are contemporaries. We've been at this thing since the early 80s and have been around for a while. Like that Farmers Insurance commercial. If it's happened, we've seen it. If it's happened, we've seen it. Yeah. So Sandro, great question. It's a great question. I appreciate it. He asks, what do you think about Friday CPI? I think it's going to be important. I think Friday CPI is going to be important. I think, this it's one of the many inflation indicators, right? And I'm just going to show you the Econo Day schedule here. Pull it up. Friday CPI, Consumer Price Index. They're pretty good at predicting it these days, but not always. This will be a good one. I'm just going to click on the Econo Day calendar here and see what happens. We should get a little. Here we go. So we have consensus, right, from the so-called experts, whoever they are. Consensus from the experts, and when the number comes in, is the consensus in the range or is it out of the range? All of these things could definitely drive not only short-term price impulse. That's another thing I should just trademark. I just made that up. Price impulse, short-term price impulse. In other words, this thing's released at 8:30 East Coast time, and the market's going to move a little bit, especially if we're out of whack to what the consensus is. And then this is additional data that I think that the FOMC folks will use next week in the last FOMC meeting of the calendar year to discuss things like tapering in particular, and then interest rate hikes. So great question though. I think it's a great observation. It's going to be it's going to be important. Rest of the week, we have jobless claims as usual. That's always fun to watch. And that's really about it. So it should be kind of slow. Fed is until next week. So short of any new COVID surprises or international tension surprises, we should slow down on the volatility, I think. We'll see, though. I could be wrong, as we're approaching new highs again on this market. I'm just going to go ahead and look at this and suggest, well, maybe there is an opportunity on a breakout trade, right? So a breakout trade idea, and we're just let me just make this a little bit easier to see. 1, 2, 3 candles. The tops of these candles are about the same place, right? And the breakout trade idea would be, all right, if we start trading above this, we're gonna just rail even higher. So what I want to do is I want to buy on a stop, as an example, right? So this buy wouldn't be protective, right? It would be a buy on a stop. And then the idea is, all right, once we start trading above the highs here, we're going to have momentum is going to kick in, buy orders are going to kick in, and we're going to go ahead and then try to take advantage of that quickly, right? And do a sell limit order. Now this could backfire in so many different ways. It's not even funny, but one bad way is you're buying the high, right? It does make new highs. After 3 candles of resistance, it does make new highs. You get filled up here at 85 and a quarter, and then the market stalls, and then you bought the high, right? So it's dangerous, but it is a strategy. So buying on a stop is something that, or selling on a stop, right? Instead of it being a protective type of trade idea, this would be an entry trade idea. Oh boy. What are we talking about? We got all sorts of, I'm going to leave that there just for fun. We'll see. And actually, I'm going to go ahead and put my rectangle up here right now. So I draw these rectangles. I try to identify areas of support and resistance. And here we have a situation where we have what I do is the bottom of my rectangle here is kissing the highest closed candle that's occurred. This candle is still going. It's not closed yet. So that's why my rectangle is lower than where we're trading right now. And so this is my whole area, what I'm calling my area of resistance, which, before we do any counter trend trades, we want to see this thing kind of, I don't know, I would like to see yet another candle in here, because we have a higher high in there, and now we'll see if we can get a third higher high. If we do, we're going to end up being long. Robert, thanks for coming. Appreciate it. Hope to see you tomorrow. Tell your friends, your family, your neighbors. Hit that thumbs up button on the YouTube channel. Yeah, so Jim, I know psychologically it's very hard to do this kind of trade because psychologically I'm thinking anyway. I don't know about you. Can't go any higher. We're up 93 handles. We can't go any higher, and so it's a natural impulse to want to do a counter trend trade. And I get it. And maybe there's one coming here. And this is the 4th candle now. I'm actually going to cancel this because I don't think it's a good idea. So, again, we have 1, 2, 3 candles that haven't closed in the rectangle. The 4th candle is trying. We'll see what happens here. Let's be a little bit more patient here before. Maybe we would do a counter trend trade. Who knows? Hang on 1 second. Sorry about that. And since these are 10-minute, this is a half an hour worth of, well, my rectangle is my half an hour worth of resistance. And so from a counter trend trade point of view, I do want to see I want to see penetration into my cloud. And the tough part about doing one of these trades, and my fib line's a little bit off here. Kind of get it up here, is where do you put your stop loss? Right, that's the hard part. Where do you put your stop loss? Because you're running out of data, right? So if we said, hey, listen, I want to get a higher high. I want to go ahead and try to sell a contract, counter trend trade idea. Now we have to kind of scratch our heads and say, all right, where are we going to put a stop loss here? Should we actually get short at 80, 85, 50? So that's the tough part. That's the tough part. You could do a fib extension if you wanted to. But look at where the point of control is now. It's way up here. So I do suggest maybe we're going to start forming a really nice node here. Let's see what happens. Yeah, bulls are definitely in control today. No question about it, for sure. And I like Griffin's answer. Once you learn how the platform works, right? So I agree with this, what Griffin's saying. So when you get a free real-time practice account, spend that time learning the mechanics of the platform. How to set up your charts, how to place trades, how to do some analysis. And that's kind of the key there, is the mechanics. And then also start getting a flavor for the time of day you're going to trade, the contracts you're going to trade, the size of the contracts you're going to trade, and then start generating muscle memory around that time frame. For us, it's 9 to 10 Central Time, or 10 to 11 East Coast time, where we do this 3 times a week over many months, and we're starting to kind of get a feel for how this is moving around, right? So that's kind of number one. And then number two is funding an account, right? Risk capital only, and maybe getting your feet wet with micro contracts, right? They're 1/10 the size of the regular contract, so your relative risk is less. And we got filled. Hang on, I'll talk about that in a second. And but the psychological challenge, even though you're trading a smaller amount of money, the psychological challenge is still rears its ugly head, right? Rears its ugly head. We talked about all that stuff. You got adrenaline, serotonin, melatonin, the list goes on and on. In addition to the fear and greed, right? So great way to go. Let's get my feet wet. Let's see what happens psychologically when I start trading real money. I continue to practice in the time frame I'm interested in. And then if it turns out this is for you, it's for you, and you keep going. Okay, anyway, so here we are now in our bad trade idea with counter trend trade. We've blown through my rectangle significantly, right? This is no longer, when this candle closes in 6 minutes, my guess is this is no longer going to be the area of resistance. We're going to have to move it up right now. We're about 2 handles out of pocket. And so now what do you do? Where do you put your stop? I mean, you're going to have to find a random spot. Yesterday, we weren't trading this high. There was no data even to match up with yesterday. And so that's the challenge with doing these kind of things. When the bulls are in control or the bears are in control, and you're trying to do a counter trend trade, and you have 3 candles that are supporting the idea, and sure enough, the 4th candle now is kind of messing you up. So I think at this point in time, you got to say, all right, how much am I willing to risk here, and then where do I want to try to get back in? And I don't know. I'm going to move something up to 92 and just wait. That's and since it's a micro, right, it gives me the ability to do that. It'll be a buy stop up here. Since it's a micro, I can give myself a little bit more room, but I'm only 2 handles away from where we're at right now. My expectation is that we're going to get stopped out, and that our earlier trade, our breakout trade idea, might have been successful, might have been a good one. In any event. So I'm going to expand on what Griffin just said. Here's the deal. It's really hard. If you cannot make money on 1 micro, you can't make money with 10. Get good with 1, 2 at the most, then expand. Yeah, and I'm even going to, what I would like to throw in there is kind of a corollary is, the micro NASDAQ market, that thing with just 1 contract, that thing moves. That could be kind of dangerous. So be careful with that risk capital idea. Terrence, good luck on your test. Keep my fingers crossed. Hope you're feeling good. And If you're not feeling good, I hope you feel good quickly, soon. Anyway, this COVID thing is horrible. So now our 3 handles into this trade on the wrong side. Point of control, 81 3/4 now. Martin Wall says 46.91.5 is 50% retracement of the last impulse. Okay, so that gives us an area of interest, and we're just a little bit north of that, so we're at 92 even. I'll just put my crosshairs there where Martin was suggesting. Level 2 trading says acceptance of the active POC. Level 2 said puked. The short delta lifted. Bao. Sorry if I say your name wrong. I'm really bad at names. Can we add the tape and sales as another column on the Superdome? Yeah, but I'm not a fan. Well, on the Superdome. So here are the columns. Right click. Everything in NinjaTrader is right click. It's really easy to kind of handle. So you will get some. Here are the columns you could add right now, just off the shelf with the Superdome. P&L and volume are the two favorite. Let's add the P&L, and then let's add the volume just to show it. I'll take it off. It's a lot of data. Let's kind of move it over like that. So the volume bars here in the blue. This is volume profile, only tick by tick, right? Each one's tick by tick, and you hover your mouse in there, it shows the volume. I could set it up. I could change the. I could change it so that it permanently shows. Show volume text. Just check that check mark there, right there in the middle, and all the numbers will be there. Just give it a second to populate. And then on the P&L side, what this is saying is, hey, Jim, if you get out of the trade here at 87.25, your unrealized P&L is $8.75. If you were to get out of the trade there. So the same thing here. It just kind of moves around. So this kind of gives you I don't like it because I don't like to trade the money. I think trading the money is a mistake as opposed to trading the structure. But a lot of folks do like to see that. So, but I'm going to practice what I preach here, and I'm going to go ahead and get rid of it. I'm just going to remove it, apply, and OK, and we'll leave it at that. Move this over a little bit. And where is YM is up 538. Wow, just unbelievable. All right, so that's where we're at. I'm going to leave this alone. I'm going to leave the structure of this alone. One other trade idea that you might want to consider here. While we're in the short position, toggling this to a 2. So if we are patient enough, we come back down to this retracement level, which is no longer the retracement level, as we're making new highs as we speak. Then we'd pick up our second unit to buy here, but we're still lined up good with the volume there. So I think I'm okay there. Wow. So I got to move my rectangle up now to the top of the previous candle, because that's the highest contemporary candle close. So now I just shifted up my whole area of support and resistance. And as you could see, this was the counter trend. Again, I'm not a fan of them. We did one anyway, but that's the way it works. Griffin says, I wouldn't go short today with someone else's money. I hear you, man. Bugging out. All right, bud. Thanks for coming. Good seeing you. Have fun with the dog. Bollinger Bands are good. I prefer volume weighted average price and that's on NinjaTrader software. That is right. Show you. It also is in the order flow section. volume weighted average price. I prefer that over Bollinger Bands. It's a similar type of thing. You get a banding effect up to 3 different standard deviations. And I would kind of experiment with volume weighted average price instead of Bollinger Bands. But, if you get good at them, you get good at them. You should go with it. All right, so while we're waiting, I'm going to stick around for another candle. Let's see, one more candle closes, and then I'll kind of talk in terms of how I'd manage this trade going forward and answer any last second questions that I might have missed. And I do want to remind everybody, trading futures options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in future trading, you have a high combination of volume and volatility, leverage and volatility, sorry. Equation for opportunity, also equation for risk, so be careful. We're trading right at the highs now. Counter trend trade fail in real time. We only have a micro on, so it's okay. We have a $20 unrealized P&L right now, but I think it really demonstrates this idea that no matter how much the market rallies or no matter how much the market breaks, the idea that it can't go any higher or it can't go any lower is just a general idea is a bad one. It's typically bad thinking. So this was a good example of bad thinking, and I'm glad it happened. Mike, send me an email, jim.cagnina@ninjatrader.com, and I'll do some research for you. Okay, so if you're having trouble right off the bat with the license, my guess is something's set up not correctly, or there's maybe that's kind of an odd thing. So I would go to what you need to do. Machias, could I call you Machias? Is that right? Hit the help tab on the control panel, email support, click on that. It brings up this little dialog box. You can attach a picture if you want. These guys at support are dedicated to platform support, and they're very quick and they're very good. And so I just shoot them out your problem, your issue, hit the send button, and they will get back to you very quickly. Ali says, my candles are longer. Well, look at that. That is crazy, that wick up there. I'm not sure what you mean. So I have a 10-minute. Are you on a 10-minute chart? I have a 10-minute December micro E-mini S&P chart up here. So this is why these candles are these sizes. This is every 10 minutes. Open, high, low, close data is finalized, and then the candle is painted and it's over. So check to make sure that's what you're setting it. And then it should look exactly like mine because the data is no different. Martin says you may get your reversal on the 46.91.5. Yeah, no, I know. How about that? So that was that was a good call. We were, if you remember earlier in the conversation, and Martin suggested 91.5 is a rotation, and look at where I have my crosshairs. Look at the high of the candle that's happening right now, and you're either a blind squirrel that just got the acorn, or you're a genius. I'm going with the latter. I think you're a genius. That was perfect. And then, so now we have sellers coming in right now. We have 4 more minutes here. I'm going to stick around for the close of this candle. It's a very interesting candle right now. And we'll see if we close within my rectangle or if we close below the rectangle. That's going to be kind of important to me going forward here. One of the things I will do is I'll adjust the height. I feel like we should give us some more. It's never at the top of a rectangle, should never touch a high, in my opinion, again, because it's volatile. The market's moving around. I mean, it's volatile. Prices, don't go one tick and rest. One tick and rest. Doesn't work that way. Yeah, good comment. Big Capitan to Ali. The F button on the upper right-hand corner will resize the candles. That's this F button right here on the upper right that he's referring to. Where my mouse is, upper right-hand corner is a little F button. No, you're not, Martin. That was a good call. We'll see if it holds or not. We're still 3.5 handles outside of where I would be comfortable at. But look at where the top of the value area shifted to. Top of the value area now is in my rectangle. Very offensive. I did not invite it. It just jumped up there. As more volume is accumulated up here, this whole value area will shift. You remember, these histogram bars are just volume that's been accumulated at various prices throughout the trading session. Not a lot, no magical equations, just outright data. Jim, thanks for coming. Be well. Thank you. I'm going to wrap it up here in a couple seconds here. And so the punchline is probably going to be, if we're just kind of where we're at right now, I'm going to leave this alone, let it kind of run out its course. If we get stopped out on this one lot, then I'm going to change my 2 entry down to 1. I'm going to bring this, we're at 75 even. I'm going to change this 2 lot to 1 lot if we get stopped out. If we don't get stopped out, then I'm just going to hold tight and see how this market structure continues, whether or not we're going to get any semblance of resistance or not. But right now it's not looking, it's just looking strong. It's looking strong. I'm looking at, and usually the reason I'm looking so much at the Dow Jones is that has been recently the weakest of the stock index futures, and routinely, and now we're up 574, and that's a big number for the Dow. Level 2 is waiting for London to close in 30 minutes and enter a short and go walk the dog. All right, I love all the dog walking. This is sweet. All right, so level 2 is saying, hey, the participants of the market are going, the paradigm of the market is going to change in a half hour because the London trading desks are going to close, or the London exchanges are closing. That means the participants that are participating in these markets might change, and buying pressure may be relaxed, I think is what you're saying. Or maybe you're saying the opposite, but no, I don't think so, because you're going to enter a short. So that's a strategy. That's a thing. Level 2 is thinking about factual phenomenon that everybody could know. Everybody knows when London closes. Everybody knows when Frankfurt closes. Everyone knows when Asia opens. So, I mean, you could look it up and you could write it down in your calendar and say, okay, these things could cause price movement. So that's a great observation. Appreciate that. Kaz says, taking too long to move down, contra 10 always bites you. Yeah, and we're having continual series of green candles. And this is the other reason why I think this is a bad trade idea. We have a series of higher highs, then things kind of slow down. Higher high, higher high. We got a lower low. I'm sorry, higher low, higher low, higher low. That trend's up. It's a bullish trend up. We're going to get stopped out. So that's another thing to look at, is these highs and lows. These 3 candles were not enough to establish, in a day like today, to establish an area of resistance. Rebecca, thank you. It was really good seeing you today. Appreciate you being here, and have a great day in hopefully sunny Arizona. Kaz is south at 87.5. Couple handles advantage over our trade idea. David, thanks for coming. See you Thursday. Chris, see you tomorrow. All right, so our situation is over. So What's gonna, we're gonna get stopped out here. I'm gonna change this to a 1. And then I'm gonna change this to a 1. And then I'm gonna see what happens the rest of the day. Thanks everybody for coming. Appreciate your time today. Looking forward to seeing you again tomorrow. I will be here, same bad time, same bad schedule. Everything is going to be good. Be careful out there, be safe out there, and be good to each other. Take